Tuesday, August 18th, 06:14 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. This video is going to go over, I'll say, a beginner's guide. It's a bonus video for all my Patreon members and eventually for the public. Beginner's guide on the financial markets. We're looking at 6 grids here. Each grid is 1 month. Each grid has a different financial asset. You got that so far? What you're looking at right now is live. This is the futures market. It's open right now. There are different futures exchanges. There's also a U.S. government asset market called the U.S. Treasury Department. It auctions off different duration financial assets. Top left is the 2-year note. Many media outlets, TV, radio, newspapers, talking heads, misspeak and call that the bond. It is not. It is a note. If you read U.S. Treasury website, call the U.S. Treasury or visit the U.S. Treasury, you'll get schooled on the proper terminology. Shameful, the ones that have a big audience misspeak. Again, there are many degenerates in outlets. Well, the top left 2-year U.S. Treasury is currently trending down. The middle is the 10-year U.S. Treasury note. It's considered a long term. Again, anything below the 10-year is short term. Anything above the 10-year is long term. The current 10-year note is trending down. Notice the top left 2-year, in the middle, the 10-year. They're very close to the lows of the year. The far right is the 30-year bond, long-term, U.S. Treasury. Look what's happened since last night. New low for the year. Again, the 2-year, the 10-year, the 30-year U.S. Treasuries all are trending down. The lower they go, the inverse. The U.S. Treasury yields go higher. Higher yields put pressure on to raise interest rates. So the top left, again, the 2-year U.S. Treasury note trending down. Below that is the 2-year U.S. Treasury yield. The high for the year, 4.37. That was the interest rate at that auction. Expect it to turn back up again shortly. Shortly meaning maybe today or the next few days. We're near the highs of the year. The middle, the 10-year note. The bottom, Treasury yield. It is trending up. That high was 4.75. That was giving a higher interest rate than the 2-year. Again, the longer duration, you expect the higher interest rate. And the far right, the 30-year bottom right, U.S. Treasury yield, trending back up. The high of the year, 5.27. Give you some other insight here, a bonus. Golden nugget. Your mortgage companies, your CDs, U.S. Treasuries, money markets, different financial assets, institutions, when they lend money out or are paying you for your money market CD, they get a big sum of money and they go out in the U.S. Treasury market often. Sometimes might be other places they're buying these at that are highly risky. But again, they buy different durations, U.S. Treasury assets. So example, let's look at the bottom right one, the 30-year. If they happen to buy the one that was 5.27, earning them, the financial institution, 5.27 interest on that money they're investing in the U.S. Treasury, aka IOUs, U.S. debt, well, they might give the public 4.5% interest, and you're a happy camper with that because you don't know any better. Well, again, you could go straight to USTreasury.gov website and buy these on your own. You can put the big boy pants on. You don't need your credit union, bank, broker to use your money to help their payroll. Why don't you keep that money yourself? Yep. So we're about to change this content and go to the next financial assets. But I'm going to leave this here by showing you that, by telling you, different of these U.S. treasuries, the short-term, long-term, have different impacts on the markets and economies. The short-term 2-year note has a big impact on the U.S. dollar. The middle, the 10-year U.S. Treasury note, the long-term, has a big impact on mortgages, credit cards, auto loans, business borrowing, government debt. And the far right, the 30-year U.S. Treasury bond, the long-term, has a huge impact on the stock market and the economy. Again, they are all U.S. Treasury assets, different durations, and different impacts on the markets and the economies. That being said, when they trend lower, the yields go higher, put pressure on those interest rates to go higher. Forward thinking, I just gave you a nugget of information. You see where we're going. Yep. Again, now you're situation aware why things are occurring and why you might see something the next day, the next week, the next month. Instead of being clueless and waiting for some degenerate elected candidate or pending candidate to be elected, or current serving candidates giving you misinformation or fear. Okay, let's go over to the broader markets. We are no longer in U.S. Treasuries. We're going to be looking at the currency market, the equity market, and the commodities market, the real basic. The top left, all these are daily charts. Now we're looking at 3-month duration. Again, prices are moving because the markets are open. The futures markets are open. This is the U.S. Futures Exchange I'm showing you. Top left, the euro. See the bottom? The low of the year? Since then, we've been going up. Full disclosure, I'm in bullish positions, earning income in my euro positions. I've shared that to my advanced Patreon members when I enter and close positions. They have the opportunity to follow me and do their own thing. I am not telling them what to buy. I'm showing them what I'm buying. And then they make the executive decision, what they want to do. So again, the top left, the euro, is one of the major currencies in the US dollar index. Again, the key word is US dollar index. The euro is the largest weighted currency in the US dollar index. And yesterday, we formed a bearish pin bar. So I'm expecting a retracement of part of that wick as well as that imbalance area. And I will make trade decisions to include the daily chart and other multiple timeframes and other situations of the U.S. Treasuries and yields. On the bottom left, we have the Japanese yen trending down as expected. I have 0 positions in the Japanese yen. Japanese yen very likely going to continue going down into that imbalance area. I explain details what's been occurring with that in my other videos. So enough on the currencies. Again, the Japanese yen is the second largest currency in US dollar index. So when these euro, yen are trending down, the inverse, the US dollar index goes up. But again, part of it is the situation with the 2-year short-term note. I would focus more on, on the U.S. Treasuries. And then I come over and look at these assets. That's why I showed you first what I was looking at. Okay, the middle, top, the bottom, middle. U.S. equity indexes, S&P 500 futures, We're already trending down. We broke a swing low. That blue horizontal line, swing low. We're in an imbalance area. I'm bearish stock indexes. I have skin in the game. I've been short the NASDAQ 100 since last week, trading bearish, earning income. The bottom is the NASDAQ 100 futures. Big sell-off this morning. Good for me. I'm going to see more gains in my option position. I shared that trade idea when I got in it last week. I see many people who were buying at the highs. Well, now they're in the losing side. I'm a contrarian. Top left and bottom right, commodities, crude oil. Right now, the barrel, $84.27. I shared yesterday that I had one of my crude oil. I'm bullish. I have swing trade positions, many of them open right now in crude oil, bullish, earning income in gains. Yesterday, one of them closed for 50% gains. I think that was the 4th September or the 11th September option contract. Yeah, good for me. And we're trending up. Bottom right, gold. I'm bullish. I have swing trades, earning income, already have gains. I added more last week. Yeah. So we're in this consolidation pattern right here on the far right. But again, we're building staircase pattern higher high. So on dips, retracements, I'm looking for key levels to reload. Again, you notice I'm showing you crude oil instead of natural gas. I'm showing you gold instead of silver. I'm showing you the S&P 500 and NASDAQ 100 instead of the RUT. Again, major financial assets are my first priority for trading, investing. For the top reasons, liquidity and type spreads. Well, that being said, last week I was looking to reload, which I did. I was originally looking to reload on the crude oil because crude oil had a better A+ setup chart. Again, chart's one thing, but when I go look at the options and the return on investment and other stuff in the options for pricing and spreads, volatility, the crude oil compared to the, again, gold had the A+ setup, but crude oil was better. But the payout, example, if I do $500 spreads and crude oil wasn't paying, it was paying less than $100. Where gold for $500 credit spreads was paying, I think it was like $130. Yeah. So if I'm going to invest $500 for each position and multiple contracts doing this, I'm going for the one that's paying higher. So gold was paying a lot more than crude oil at that point in time. So again, that's why I choose the gold. I'm not going to put all my eggs in one basket. But again, my first positions went into gold and then other financial assets that were giving me better payouts for the option strategies I use. Yep. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching. Thank you, Connie, for your support.